Well, let's move along. What's going on in the used car and truck market? Wolfstreet.com. As affordability challenges hits new vehicles, consumers switch to used. Prices spike to record. Inflation psychology sets in. For a brain-twisting phenomenon, amuse yourself for a moment with the Consumer Price Index for used cars and trucks. It shows that there has been 0% inflation since 1994 in used cars and trucks, despite actual prices having soared. So yes, the CPI for used vehicles in June, as reported by the Bureau of Labor Statistics, or BLS, fell 0.7% from June a year ago and is where it has been in April 1994. Here, in case you think I'm making this up. I notice my little bald self belongs over here in this corner. Let me move myself a little bit larger. Effect of hedonic quality adjustments, 0% inflation in 24 years. Wow. This absurdity of 0% inflation since 1994 is caused largely by the BLS's relentless and passionate application of hedonic quality adjustments, which adjust prices for the costs of a model's new equipment and quality improvements, such as, to quote, reliability, durability, safety, fuel economy, maneuverability, speed, acceleration, deceleration, carrying capacity, and comfort or convenience. For a more sobering sense of reality, let's head to the Manheim Used Vehicle Value Index. Manheim is the largest auto auction company in North America. Annually, about 8 million used vehicles, rental cars, lease turn-ins, repos, etc., are sold at its fiscal and online venues. This index, based on these wholesale prices, is adjusted for mix, mileage, and seasonality. On this basis, used vehicle prices jumped 5.1% in July from a year ago. The index at 136.9 hit the highest level ever for the series, Manheim said, and well, it has a little chart. I don't really need to see it at this point. The index is up 16.4% from January of 2010. Over the same period, the CPI for used cars and trucks, pictured at the top, fell 4.3%. The index stayed in the same range between 2010 and April 2017, and suddenly in May 2017, bam. This was before the hurricanes. Then in late August and September, Hurricanes Harvey and Irma created a lot of replacement demand at auctions around the country. Again, all the flooding that happened and cars getting flooded. But that petered out sooner than expected, as there was less replacement demand than hoped for. And by November of last year, auction prices were beginning to revert to the mean, or the sharp drop in the chart above. That drop bottomed out in March of 2018, and prices have been spiking ever since. The increases in April and May were ascribed to seasonality, but then became June and July. Manheim says the abnormal summer bounce that started in June continued and strengthened in July. Correspondingly, the best-selling cars at Manheim are worth more today than a month ago, and many vehicles are worth more now than a year ago. Price comparisons to last year will be tougher through the rest of the year, but recent weekly increases were higher than last year, keeping current price performance ahead of last year. And here's why. High prices of new vehicles, affordability challenges, as Manheim calls it, trigger substitution. The strange summer price appreciation in used cars is partly a function of a strong economy at its peak, with mounting affordability challenges for the consumer that favor growth in used vehicle sales at the expense of new. These conditions have supported strong used vehicle prices for over a year, and inflation psychology is setting in with consumers. The catalyst for even stronger price movement this summer is the fear of import tariffs leading to higher prices in the future. Higher prices and the related declining level of supply create a psychological feedback loop for consumers, encouraging buying now with the expectation that prices may be higher later. No, because pretty sure each and every year the freaking price of a new car just keeps climbing ever so much. The price increases differ by market segment, but according to Manheim, more affordable vehicles are seeing the greatest increases in values. Compact cars and mid-size cars had the largest price increases, while prices for luxury cars were just barely in the positive. Year over year, price changes by major market segment. Total 5.1%. Compact cars 5.2, mid-size 7.2, luxury cars 0.2, pickups 3.3, crossover SUVs 4.5, and vans 3.4%. In terms of sales at the retail level by dealers as well as private parties, July was up 3% year over year, Manheim said, citing estimates by Cox Automotive, which owns Manheim, Kelley Blue Book, Xtime, and Autotrader.com. It estimates that in July, the seasonally adjusted annual rate, or SAR, of cars or of sales was 39.2 million vehicles, meaning that at this pace, total used vehicle sales for the 12-month period would be 39.2 million, the strongest July reading in 6 years. This contrasts with new vehicle deliveries, which fell 3% in July from a year ago, and were running at a pace of 16.7 million SAR, or seasonally adjusted annual rate, according to Manheim's estimates. The industry now has to estimate monthly new vehicle deliveries after GM stopped reporting its deliveries in April. Why do they do that? Well, maybe because they suck. The deliveries suck. We don't want to tell people the true numbers. GM accounts for over 17%, by the way, of the new vehicle market. And as of April, the industry has to fill that hole with estimates. Hence, Manheim's estimates. The new vehicle market, in terms of the number of deliveries, peaked in 2016 and declined in 2017. The earlier part of this year was slightly stronger, but now the market is losing steam again, as more and more consumers, including many subprime borrowers that are getting locked out of the new vehicle market, switch to new vehicles. Again, that's what we've been talking about. Your rental money is too high, your mortgage is too high, all this stuff is that's the biggest thing that nut you have to crack every month. That's the biggest one. Second is your car usually. Most expensive thing a person buys is a house. The second most expensive thing is a car, vehicle. So you got to live first and foremost, and that's a damn nut to crack in and of itself. Oh, my property taxes went up a little bit. Oh, my insurance for my house went up a little bit. Car insurance went up. Where can we shave? Well, guess we can't get a new car this time. I can't afford $450 payment. Well, if we get a used one that's, 4 years old, what are we looking at? 3 years old. Oh, we can get that down to around $300. Okay, I can afford that. Let's do the $300 a month one. And now you're, stimulating the used car market. Again, these are all signs, though. These are symptoms that there's a greater problem here. And, well, I'll just cut back over there. I'll just go. Until there's, I can't cut back. I already got the $300 a month used car. I'm not even looking at new cars. Get that out of my face. That just went up on me. That bill just went up on me. Didn't get a raise at work, or a very small one, most people. Then what? Oh, well, we do have 2 cars, honey. We're going to have to let them repo the one car. And then it's 2005, 6, 7, 8 all over again. The boom and bust cycle has kicked in, and it's time for the bust part of that boom and bust cycle. Anyways, take care.